My name is Gavin Parry. I'm the Managing Director of Parry Global Group. We're a brokerage and asset management company in Hong Kong. From this week, our key takeaway is the lack of impact from the trade wars that are going on within the region and globally. Next week, we'll be really looking for what the economic data will be showing in relation to what monetary policy may come out of central banks globally. But we'll also be interesting to see if the empirical data from statistics holds true that historically when there's an election in the US during the October period, markets tend to do quite well. And following on to that, particularly given the situation of the trade tensions going on, how the People's Bank of China could actually use their monetary policy to help defend the economy and also to continue the expansion for economic growth. Looking further ahead, it'll be interesting to see how the markets digest and bed down the North American trade negotiations between Mexico and Canada, and to see how the global markets will use that as maybe a template for how the US will actually resolve some of the trade disputes that they're also looking at with the EU and China and other countries like Japan, major trading partners, in the global scheme of things in relation to markets. What we'll also need to keep an eye on in the longer term is the central bank in China. We don't believe that they're actually going to do any major expansion in monetary supply in the mainland. We don't think that the trade situation or trade wars or tariffs will actually become such an impediment that the People's Bank of China needs to actually put its foot in the acceleration and expand monetary policy on the supply side of things to actually stoke the economy and keep it afloat. We think that the long-term trade and economic growth prospects in China are very solid for a longer-term upward trend.